Axis numbers, but earnings continue. The management of HCL is briefing in. Let's listen in.
The growth last quarter was across our entire suite of products and services. The industry-leading performance is a great reflection of excellent execution from 132,000 HCLites with a very strong entrepreneurship DNA operating from 43 countries. We had strong performance across our Mode 1, 2, 3 offerings. Mode 1 grew by 3.9% quarter-on-quarter. Of course, all of these are constant currency numbers. Mode 2 grew by 13.1% quarter-on-quarter, and Mode 3 grew 6.2% quarter-on-quarter. Our EBIT margins remained in the guided range of 19.6%, 30 basis points below the last quarter. Coming to our segmental performance in terms of our service lines, our Mode 2 business crossed an important milestone of $1.5 billion annual run rate. We continue to see strong acceleration in our digital business, which is really reflected in a double-digit QoQ growth in our Mode 2 segment. Our combined Mode 2 and Mode 3 revenues stands at 29% of our overall revenues. Our Mode 1 business continue to show steady growth, led by a robust double-digit quarter-on-quarter growth from our infrastructure services, which is 10.4% sequential quarter-on-quarter growth and a 16.5% year-on-year in the infrastructure services, followed by our engineering and R&D services, which grew 5.1% quarter-on-quarter and 17.4% year-on-year. The growth momentum was possible due to flawless execution of some of our large transformational deals, which have moved into a significant execution phase. From a vertical perspective, 4 of the large verticals delivered more than 20% year-on-year growth on a constant currency basis. These are telecom, technology and services, retail CPG, and life sciences and healthcare. All of these grew more than 20% year-on-year. Energy, utility and public services posted a decent 8.1% year-on-year constant currency growth. Financial services and manufacturing had a muted performance on a year-on-year basis, which is expected to pick up in 2019. In terms of geographies, all the 3 geographies delivered double-digit year-on-year growth. Our US business grew 12.9% year-on-year. Our Europe business has picked up momentum. It's grown 14.5% year-on-year, and the rest of the world grew 12.1% year-on-year, excluding our India business. Most of our growth in US was from life sciences, retail CPG, technology and services segment, and telecom, media and entertainment verticals. Moving on to the deal trends this quarter, we once again had the highest booking this quarter, driven by financial services, technology and services vertical and manufacturing vertical. As you would know, this is the second quarter in this fiscal where we are recording highest bookings. We brought home 17 transformational deals across service lines, geographies and verticals, which helped in achieving a record high booking for the second time in this fiscal. The deal wins augurs very well, and we are confident it will deliver good contribution to our organic growth in the future. Also, as I look at the healthy demand environment for technology offerings in the market today, I believe our investments for the last 10 years in building global delivery centers outside India and near our clients is really putting us in a very strong position to address the accelerating demand for technology services in some of our largest markets. We today have 134 delivery centers outside India, and 61 of them with capacities of 100 plus to some of them over 1,000 plus people capacity. Of the 61, 23 centers are in US, positioning us very well to service the increase in demand in one of our largest markets. We have also had one of the highest localization rates across the industry, and this again helps us to deal with the fluctuating supply and demand scenarios that arise due to economic, geopolitical and other constraints.